One. Hello, everybody. Scott Kelly. I am the founder and CEO of Black Dog Venture Partners and your host for today's VC Fast Pitch. We got a great count today. Right now, we're at 109, including AI, so we're in pretty good shape. I am going to go through my slides in just a minute, just kind of go through the agenda and everything else for today. Again, I am going to ask that you keep the chat room clear and stay muted. So let me do this. I'm going to share my screen and go through my presentation. Bear with me. Okay. And if someone can just give me a thumbs up that they can see my slides, that would be great. All righty. Well, again, welcome to today's VC Fast Pitch. A couple things. We got these things happen because of the great partners we have. One of our great partners is Fidelity Private Shares. They do a great job making sure you have a clean cap table and organized data room. We have a special promotion with them. You can click the link below to learn more about that. And later today, Jason's going to be sharing a little bit more about the opportunities through Fidelity Private Shares. I did want to let you know about some of our upcoming events.
Hey Scott,
We're
we can't see your slides, sorry.
Oh, well, thank you so much for that. Okay, let me
I,
restart then.
I put it in chat, but I'm guessing you didn't, watch in chat.
Okay, hold on. Let me try this again. Thank you for that. Hey, Brian. Glad you keep me honest. Appreciate that.
There we
So,
go.
share screen. Okay, at least. Okay. Can you guys see my screen now?
Yes.
All righty.
It's not your
Can you?
slides though. It's there you go.
There we go. All righty. Well, again, take two. Welcome to VC Fast Pitch. Scott Kelly here. Um, again, uh, again, we're going to hear from Jason Fidelity Private Shares. Make sure you, if you want, you can book a call with that link below. I'll put that in chat in a couple of moments. We'll hear from Jason a little later today. Some great events we got coming up. We're going to have a cybersecurity webinar on Tuesday, August 11th. 10 cybersecurity tips every startup should know. That's a free event. We'll be back online on August 20th for our August VC Fast Pitch. And I put a link there to Level Up Ventures. We are a deal partner for them. And if you want to apply to their organization for funding, there's a link there. If you go to that link, there's some special instructions, and I will share that in chat. So here's our agenda for today. Obviously, I'm going over the investor remarks. In a couple of minutes, I'm going to ask our investors to introduce themselves. And if our investors can use the raise hand function, so I can call on you in just a minute, that'll be great. So what we'll do is we're going to ask them two things. Ask them to tell them a little bit about themselves, how they invest and what what stage and the like. And then I'm going to ask them to tell our companies today, what do you want to hear in a pitch? Okay. After that, we've got some great companies doing 5-minute presentations. They will be exactly 5 minutes, followed by some investor Q&A. We will have a short presentation for Jason Hammond from Fidelity Private Shares. After that, we're going to have some investor Q&A. We're going to get some opportunities for you to ask some questions to the investors. And keep in mind, I'll give you the ground rules for that in just a minute. And then after we close the recording, I'll keep the Zoom call on. And if people want to network and share a little about themselves after the recording, you're welcome to do that. So I'm excited to have some great companies presenting today. In a few minutes, we'll have Devin Wirt from Connexus, followed by Ketchup AI, then Business Brain AI, PantryProof with TJ, OrthodontiCell with Mark Terrill, and then I'll tip with Bassoon Balboa. Okay, Balboa. My apologies. So a couple ground rules. Please make sure your audio is muted until prompted to do so. Obviously, I allow the note-taking apps in. That's fine. We will send a recording after the call, so you all have a recording. And then we'll also After each 5-minute pitch, we'll do Q&A from our investor panelists first. If, in fact, we do have some extra time, we may allow some of our attendees to ask a question. But again, a question is not an opportunity to pitch. And don't post in chat until prompted to do so. And actually, that includes posting random solicitations to other people in chat, okay? And is the police of the unsolicited solicitations in chat. So if you start to post a bunch of things in chat and distract our attendees, you will be removed. So don't pitch openly in chat and don't pitch privately in chat. And then finally, I always start these events with that famous line, show me the money. And so with that, I'm going to unshare my screen and talk to some of our investors. So what I'm going to do is I'm going to go through and just call you out. Again, tell us a little bit about your firm, and then tell us what you want to hear from the pitches today. So we got Jay Gott there. Jay, you want to share about yourself and what you want to hear today?
Sure. Thanks, Scott. Happy to be here. I'm an angel investor. Redtail Capital is the company that I invest through, but it's just me making investments. I'm not a fund manager. I'm a former investment banker. And my whole goal is to help innovation move out of the lab and into the market. So I try to look for impact investments. And the thing I'm looking for in a pitch today is all about the team. But I don't want to know who the team members are and what their CV is. What I want to know is what each team member contributes to the company to generate long-term value.
Thank you, Jay. Appreciate that. Randy, well, welcome to the call. Randy, want to share about yourself and what do you want to hear today?
Yes. Hey, everybody. My name is Randy Burholtz. I'm a senior advisor to Mesa Verde Venture Partners. We're a life science venture fund in San Diego. We're typically the first VC in. We typically come in between 500 to a million, and then we add another million afterwards. I'd like to see people even. I'd like to see persons involved today really focused on telling us what's your exit. First thing is what's your exit. Secondly, what's your competitive advantage. So, I thank everybody.
Thanks, Randy, for joining us. Tim Arnold, welcome, Tim.
Hey, Scott, how you doing? Brian, I see some familiar faces on here too. It's a great cohort. Tim Arnold, general partner at Steamwork Ventures. Fund 1 was health, wealth, and sustainability in a mature seed stage. Now we're on Fund 2, which is an opportunity fund. We've got IOIs done. We're ready to write some checks here. Non-AI, non-agent, non-wrapper, non-LLMs. Boring, old-fashioned SaaS that makes money. Short holds on those. And then we've run SPVs, mostly in the fintech, health tech space. And then from a family side, we'll write checks in just about anything, everything. We're looking on that. A lot of early AI inferences, data center offloads, things like that. So, in this day and age, what I'm looking for, we're going to assume the product's going to work. Unless you're telling me you got a flying car, I'm going to want to see something. Other than that, the assumption is you'll get the product to work. But really what it is on the earlier stage for me is, how do you know a customer wants it? Will they use it? Are there other stakeholders that are involved with that? And can they pay for it? And then the second part of that is like, what's the saliency around the issue and the pain? And is that pain persistent, episodic, cyclical? And are they looking for something preventative, like prescriptive or preventative? And as long as we kind of know that, we understand there's a business, there's a customer, there's money to be made, and we can get behind that.
Fantastic. Everyone listening in, Tim and I are going to be hosting the Santa Barbara VC Fast Pitch on October 8th. And I'm very excited about working with him on that. So if you want more details, just reach out. But obviously, you'll be getting details from me soon and often on October 8th. Thanks for joining us, Tim. Topeka, are you there? Tell us about your firm and where you invest and what do you want to hear?
Sure. Hi, everyone. My name is Topeka. I'm one of the partners at Outlander VC. We're a pre-seed generalist fund with focus areas in physical AI and deep tech, backing founders as early as idea stage, often pre-revenue, pre-product with lead checks around $1 to $2 million. We focus very heavily on the team, so would love to know from the founders why the problem that you're solving is something you want to spend the next 10 plus years of your life solving.
Fantastic. All righty. Let's see who else is on the call. Joey Hayes, why don't you share a little about yourself?
Yeah, hey everybody. My name is Joey. I'm based in Amsterdam from New York. I'm an individual angel investor, pretty much a generalist, although my background is in hospitality and hospitality technology. I also do scout for Angel Squad and Hustle Fund out of San Francisco, mainly software companies, and as well as Identity VC, which is a firm we specialize in LGBTQ founders, seed and pre-seed, mostly in Europe, but expanding outwards as well. We do $250,000 to $500,000 checks.
Joey, what do you want to hear in a 5-minute pitch today?
Defensibility, I think, is really important. Like, how are you going to defend against the AI companies, the big companies coming out and dropping a product that's going to steal your market share? I think that's the most important thing. Besides that, it's always about the founders and the people and what is their mission, and is that mission aligned across the company, across the people that have founded it.
Fantastic. Thanks, Joey. Well, we have a VC Fast Pitch pitching alum and investor, Tim Holliday. Tim, welcome. Share about your firm and what you want to hear today.
Yeah, I think I'm the only alum who 12 years ago was on this stage, physical stage in Phoenix, Arizona, pitched, raised capital, built and sold the company. So always appreciate Scott and that work. Space Station Investments, we focus on consumer companies, very broadly defined. So CPG, stuff over my shoulder, but also we get into health tech, fintech, and even B2B2C. We invest out of, and then we're connected to the creator economy. So we bring creators, influencers, athletes to invest with us and help these consumer companies grow. We have a fund, $55 million fund, as well as an SPV vehicle, and invest anywhere from $500,000 to $10 million, depending on the deal. And as far as like what we're looking for, I mean, for me, it's everything that's been said. Founder first, of course, but we like to look at and think about go to market. How do you get your product, your service, your company into market?
Fantastic. Thanks, Tim. Petra, welcome. I know you've got you've been on this call before, but I'd love you to share a little about your firm, where you invest, how you invest, and what you want to hear today, Petra.
Thank you. So this is Over, my business partner and husband. We are a single family office with investment across the world. We have a non-tech side, which is in like hotel, manufacturing, healthcare, etc. And then we also have a sort of a newer arm, which is in the technology side. And we actually have our chief architect sitting in the room, Shriram. He's a head of operation in India. I think everyone will talk about what we're looking for.
Yeah, today we will, like for all our startups, we look for committed and qualified teams. So both do they have the stuff, and are they willing to put their time in, and will they remain committed to the venture for a long enough time? We look for new and compelling ideas in the field of tech and AI, and we try to gauge whether the timing is right for the product or service that's being offered, because often the best ideas don't fly when the timing is not right. So that's kind of what we're looking for today.
Fantastic. Thank you for joining us. Appreciate that. I'm going to scan through. I know a few people aren't really savvy on the raise hand function. David Blackledge, are you there?
I'm here.
So Dave, why don't you share about yourself, where you invest, how you invest, and what you want to hear today?
Great. So my background is 30-some years in working in sales and operations management of tech startups. Then I became a late in life attorney, and now I help tech startups raise money. I've been an active angel investment for a very long time as well. So what do I like to hear from a startup? It sounds simple, but I want to know if the business makes sense. Do they know how to make money? And do they have an understanding of the market and the competition? Further, I really look at, do they have a rational view of how they're forecasting and valuing the business? Those things are very important to me.
Fantastic. Thanks for joining us, David. Wilson Batista, he is new as an investor and a good friend of mine locally in St. Pete. Wilson, why don't you share a little bit about yourself, and as a relatively new angel investor, tell us what you want to hear in the presentation today.
Yeah, hi, my name is Wilson Bautista. I am the CEO of the Bautista Group, and it is my first time on the Fast Pitch as an investor. Thank you so much for having me, Scott. What I want to know is I want to know your mission. I want to know the opportunity, and I want to know how the hell you're going to exploit it. Tell me how you're going to do it, because that's what I want to know.
Fantastic. Thanks, Wilson, for joining us. I know we've got the team of Ash and Brian from Expert Dojo. I'm sure we're going to hear a ton from Brian, so I'm not going to let him talk right now. But Ash, why don't you share a little about Expert Dojo and what do you want to hear in the pitch today?
Yeah, thank you. Thank you, Scott. It's always good to be back here, at the Fast Pitch. Expert Dojo is an early stage fund. We have done 266 investment around the world. We come very early, then we back the outliers from the cohort as well, and then we go all the way up to private equity as well. Today, what we really want to, hear in the pitch, how obsessed you are with your customers. Show me that, and then we'll have a conversation. Thank you, Scott.
Fantastic.
Oh, come on. Are you really not
All
gonna
right,
let
go
me
ahead,
talk?
Brian. Go ahead. God, he's going to monopolize the call. Going to have to mute him halfway
No,
through.
I'm
All right,
not.
keep
Okay.
it brief.
There's one little
Hey,
thing.
Brian,
I see.
Brian, with respect, I love you. Please get a haircut.
Yeah,
Please.
listen, you got my friends on the call. You got all the best Tims on the call. Like, this is a good call. I don't come here for you. I just come here because, like,
There
my
you go.
buddies are
All
here.
right.
So I'll tell you what I'm actually looking for today. If I'm being very, very, very honest, I'm looking for broken marriages, abject failure. I'm looking for companies that are going through absolute turmoil in their relationship with their customers. That's what we've invested in. The last three companies have all been what I think is happening right now is I think everybody is looking for diamonds and dropping gold bricks on the way. So all these companies that have raised 5 million, 10 million, $20 million that now VCs are just giving them away for free. All of these companies that haven't. So we're super focused now, which is so far away from where we were at the beginning on late stage and finding just great bargains and deals. And I say this not because people on the call might benefit at the early stage, but just so you know how even early stage VCs are starting to think about what your competition is out there.
Fantastic. Thanks, Brian. Who have I missed? Have I missed any other investors? If you can, just unmute your mic and introduce yourself. I think we've got a few other ones on there. Mary, thank you. Please don't post in chat again. I appreciate that request. All righty. Any other? I know we got a few on there. We'll
Hey, Scott, this is Tom O'Neill.
Hey, Tom, how you doing? Thanks.
Good. I'm in St. Pete as well. I'm a retired CPA from Ernst & Young, living here in St. Pete. I'm an angel investor. I'm part of Queen City Angels, which is out of Cincinnati, and also a member of New World Angels here in Florida. Also heavily involved with Embark Collective. I'm a board member there, which is a startup hub for about 150 different tech companies here in the Tampa St. Pete area. So in addition to what everybody else said as far as what they want to hear today, I want to hear, hopefully a lot about customer traction, where you're at with relative to pilots and contracts and the like, just where you're at from a customer standpoint.
Fantastic. Thanks, Tom. Did I miss any other investors? I know we got a couple of people that'll be logging you a little bit later. Oh, there's Eric. Eric, thanks for joining us.
Yeah. Thank you for having me. So nice to. This is my first session here with your group. So nice to meet everybody. And my name is Eric. I'm with InterSystems Ventures. We're a corporate venture fund based out of Boston. We do pre-seed investing into AI, healthcare, supply chain, and fintechs. And the larger corporate is an interoperability provider, so we try and leverage that to help startups grow. And that's us. What I'd like to see from startups today is, I would say, your team, the capabilities, and why your team is the team to back, right? So, okay.
Fantastic. Thanks for joining us, Eric. I appreciate it. Gary, why don't you share about yourself and what do you want to hear today?
Yeah, hi, Gary Tomchuk with Investor Circle. We're the oldest and premier impact investment angel group in the country. Been around for 34 years, invested over 300 million. And so I'm looking for what companies are doing to turn their products and their companies into models for making a better world.
Fantastic. Thanks for joining us. I really appreciate that. All righty. Well, we're going to get into it. So basically what's going to happen now is I'm going to throw our presenting companies in chat, just so you know who you are. What's going to happen in just a couple of moments, I'm going to call on our first presenting company. and that is going to be Devin. I am going to start my timer here on my phone with 5 minutes. I'll count you down, 3, 2, 1. You pull up your slides, do your presentation. Look for a 30-second warning in chat at 5 minutes, regardless of how well you do, how good you look, and how interesting you are. I am going to cut you off. After that, then we'll give our investors an opportunity to ask questions. So I always like to give a shout out to the first entrepreneur today. We got Devin. Devin, are you there?
I am here, and I have the same barber as Brian, right? So Brian needs a haircut. I got his back.
Yeah, I think Brian should go that route, quite frankly. But anyhow, Devin, why don't you share your screen?
All right. Sounds good. Look, I appreciate everybody's time. I actually see one of our current investors on the call. Patrick, good to see you. Devin Wirt.
Hold on. Let me count you down to get the clock right, okay?
Oh, there you go.
3,
couple seconds.
2, 1, go.
All right, there we go. Devin Wirt, CEO, one of the co-founders of Connexus. We are raising on a 15 million post-money cap on a safe, 3 million in new capital. There's 1.3 million left in the round. All in to date, we had a seed round at 800,000 back in 2024. It was at a 4 million cap, 3.2 pre. And currently we have 3.1 million of ARR that we're going to dive into. So on the team, myself, like I said, it's my third time. I'm a 3-time founder. I've had 2 successful exits. I'm an angel myself, so I do understand what you're looking for, especially in the current environment. My counterpart, our president and COO, Heather Moore, comes from the largest apartment company in America and the world, Greystar, where she was the managing director. And before that, she was an officer at Avalon Bay, which is the largest publicly traded REIT in the multifamily space. And then lastly, Melissa comes from the client success and the marketing component, comes from Granger and Matrix. We do have right now 32 full-time members from the team, so that are all split into different divisions. So we're not that early stage startup as many of the investors mentioned. So after I sold my last company, I consulted for both private equity and public at a public company and in the real estate space. And I noticed they had certain core components. Nobody knew where their contracts were. It was amazing to see 60% of the contracts at these $200 million assets were on file. There was no centralization. There was gaps in compliance and benchmarking, and property managers just didn't have a scope. The benchmarking component was really big for me as a data guy by trade and a numbers guy, that people didn't understand any rhyme or reason around what was a good price in each area. So what we wanted to do was create the first operating system that could do 3 things for procurement and vendor management: reduce cost, drive revenue, and ensure compliance. In today's world with high interest rates and high insurance rates, profitability is of the utmost important. And we are doing all of that for our clients in a proven model as we went. So we went to market 18 months ago. So 2025 is when we started really going to market. We closed 2025, which goes through the financials, at a 1.1 million ARR rate. We ended H1 we're starting July 1 at 3 million of ARR. We've achieved 11% savings for our current clients. We are spread out. We have diversified revenue, so we're not at risk. That was a go-to-market strategy that has paid off. We have raised 2.4 million, 41 different clients across 7,000 properties across the United States, and we have 3x our revenue from December until July 1. Financial metrics, very plain and simple. You can see 24, we had the initial concept. 25, we grew to 1.1 million. 26, we are hitting profitability, and we will talk about exit strategy going forward. 27, we're expected to double again. Our forecast is growing month over month. Just in Q3 this year, our forecast, not our pipeline, they're very different for those of you, especially the EY guy here on the call, are very different on the projections. We understand our success metrics there. That'd be nice. This is a large TAM. We're not just in multifamily, we're sector agnostic, and we can go past there if we would end up keeping the company post a small to mid cap growth equity recap. We're currently focused right now is multifamily, hotels, commercial, and HOA. We are diversified across everything except hotel right now on the revenue front. We're backed by people, my wonderful friend here, Patrick, who's on the call, but we also have other notable ventures as well. Venture South, as for you Southeast guys, I've recently put in Atlantic Technology Angels, but we're also backed by SCV, Second Century Ventures, which is the VC arm of the National Association of Realtors. And most importantly, we're backed by the real estate industry. They understood that there was an issue of what was going on here and how to fix it. Most importantly, if you don't have your moat, Any investment you take a look at, you will fail if you don't understand it. We are deeply embedded in the workflow with institutional knowledge as it goes through where AI cannot cut us out. Second, we leverage proprietary data to ensure best-in-class pricing and understanding the benchmarking data for our clients, whether it's an underwriting process of buying a new property or where it is. Next, ecosystem control. Our insurance product controls the gatekeeper from where it goes through, how they get on site, ensuring their payments are there. And lastly, network effects is that we have multiple partners that can drive revenue share, and we partner with other companies to ensure a seamless experience. Once again, truly appreciate the time here. 1.3 million left in the round, 2.4 million raised, raising on a 15 cap, 3 million of new capital. And we are profitable this month, just so you're aware. We're throwing growth equity behind AEs and engineering to raise different components. But I'll stop there, give everybody back some time, and be efficient with the presentation.
Fantastic. Great job, Devin. That's how it's done. That's how it's done. All righty. If you are on our investor panel and you have a question, you can either post a question in chat or raise your hand, and I'll call on you and ask your question. Anne raised her hand. Anne, you have a question? I think she's just trying to show people. Just trying to show people how to raise the hand. Thank you, Anne. I appreciate that.
Yeah, that was accidental. Sorry.
Not a worry. Not a worry. So, go ahead, Petra. You got a question? Go ahead.
Sorry, can I just double check your number? You were saying that you're trying to raise how much and what is the valuation? And
valuations of 15 million post money. So it starts at pre. It's on a safe. We prefer safe. We're open to a note, but we prefer to keep everybody on the safe. We are raising an additional 1.3 million on this round.
And how much have you raised?
All in, we've raised $2.37 million. On this round, we have raised 1.6.
So your revenue is 4 point something, and your valuation
3.1 million today. We'll close the year at 4.2.
4.2, and your valuation is 15. The numbers seem. I mean,
it's a good investment, Petra. So our exit valuation, we've had it all already. I mean, if you want me to raise the valuation on you, I'm always happy to do that and take less dilution.
A little bit confused. That's all.
Look, the fact is that we would have to do additional saves and be able to do it and to go through it. The fact is, this round will close in the next 60 days. We have right now 13 different data rooms open to investors. So the valuation will raise on where it is, and we'll either go for a price round or honestly a small to mid cap growth equity for where it is.
Fantastic. Thank you. Thanks for that. Tim, you had a question? Go ahead, Tim.
Yeah, I just want to know what your minimum investor is.
Oh, that's David. Go ahead, David. Sorry.
Yeah,
Get you next, Tim.
Just looking at you're trying to raise X dollars. What's your minimum you expect from an investor this time?
Minimum check is 25,000, or otherwise it gets too tied up in legal and conversion, all that stuff.
No, I believe that's great. That's very very common. That's great. Good for you.
Yep.
Thank you.
Right. Tim, you had a question? Tim Arnold?
Yeah, great presentation, Devin. I love it. Question on use of funds and what do you expect for subsequent equity financing before your exit?
Yeah, so I'll be super candid with you, and I've had this conversation with one of our investors on the call. Right now, we're looking at expanding the engineering team. We're obviously agentic on the software side. You can go through our tech stack. We have a pretty buttoned-up data room. Second is that I am all 3.1 million of your current revenue. We need to hire 2 account executives. Feel free to put me in OpenAI on ChatGPT. I'm a chief revenue officer by trade, so I build teams in order to scale them.
Thank you.
Yep.
Fantastic. Any other questions? All righty. Great job. Great job. All righty. We are going to have our next presenter. We have got Catch Up AI with Alireza. You there? All righty. Give me 1 second. I am going to tee up my.
No worries.
All righty. 3, 2, 1, go.
Hi, everyone. This is Alireza Boloorchi with Catch Up AI. We are the autonomous manager for employees and agents. Think of how Cursor is helping engineers these days. We are going to help managers to be more productive and 10x their abilities. With boosting their productivity, retain their top talents, and then let managers spend more time building rather than managing people. And we are back with Plug and Play Accelerator at this point. So over the last few years, we've seen engineering teams are moving 50% faster than before. But as that work is speeding up, the work signals is getting missed. So the top performers start leaving the companies, and the strong performers start losing their momentum. In a 1,000 people company, every year, 50 people leave quietly. That costs companies about $50 million. And then about 150 of the top performers actually start losing momentums and get disengaged. That's costing companies about $7 million. So overall, $22 million per year for 1,000 people company, and that cost goes up exponentially. This was not an easy problem to solve. So I put together the people that I trusted, and they had domain expertise. They've been managers before they scaled engineering teams. I worked at companies like Visa for decades, Visa, KLA Tencor, and I served as a VP of a multi-billion-dollar tech startup. My whole life was helping these organizations become more productive and reduce them, make them flatter, and help the managers to do better. Trained over 200 managers over these years. One problem is that I was the most expensive resource they had, and the time was not in their favor. So we built this team to scale it and make it much faster for everyone, and we're using AI to do that. How it works? We are cloning the best managers people have. We monitor and analyze the employees' productivity and coach every employee personalized for them. We also build up a Gen Z friendly, lightweight 360 feedback that AI goes and gathers those data from people around you. Then we find out who is disengaged or about to leave the company, and AI finds a way to bring them back in when it's time to making decisions, promotions, transformations, everything. Data is available. Result is higher productivity and lowering turnover. How it works is that we connect with all the tools companies have, Slack, Jira, Git, only public channel, public data that is available for the employees, build up a network between employees, a team of them. We do organizational analysis, put that together, contextualize data. We can build a loop between manager, employees, and our AI agents that are in their work stream. To take a quick look at the snapshot of our product. So day one, we connect to all the tools. We go 6 months back, get all those data, analyze them, map them together. We create dashboards that we can provide, but it doesn't stop there. It goes in the Slack messages, run one-on-one with the team members, Slack or Microsoft Teams. It works with the managers in their workflow. So it builds a loop, learn, follow up, detect, and nudge. So we keep doing that and be helping organizations getting better. So our ideal profile, customer profile is Series B plus and company enterprises, mid-sized enterprises with innovation funds. It's about 100 to 2,000 employees, and we are very focused on software-intensive companies. The reason is that they have the pain point of they have no visibility, their manual works, and they're break at the scale. Usually reach out to CHROs and CTOs as our persona, and we are using our partners like Plug and Play, Fractional People to help us grow. Our beachhead market is 1.5 billion. That's about like companies under 2,000 people, software intensive, about 9 million users here in the US, $15 per user per month. That gets us to 1.5 billion. And then as we grow, we go to USA knowledge workers, and then we are going to expand globally. That will get us to 180 billion. So if you look at our competition, so most of our competitions are using manual data, getting manual data, analyze it using human, and then provide feedback. Ketchup AI is the only tool that gets all these data, put them together, analyze it, and acts on it. So that's what makes us unique. So making everything autonomous, having one employee as a manager. So letting a manager handling 30 to 40 to 50 employees. Another thing that makes us solid is that a FICO-like a score that is called merit score. As we gather this data, it works like a flywheel. We keep getting this data, and we will have a verified resume for every single employee. That will replace the resumes, references for future talent acquisition, which is already broken right now.
All right, Alireza, why don't you keep it on that screen for now?
Okay.
And we'll go through some of the slides as we go through Q&A. If you have a question for Alireza, you can raise your hand in chat, or you can post in chat. We have any questions? So while we're doing this, if you have a question, we'll take Tim's question in a second. Why don't you go to the ask slide and what you're raising? There you go. All righty. Tim Arnold, go ahead. You got a question?
No, I'm just trying to fill the silence. If somebody else has, like, fire away. But on your team, you've got this all-star cast of characters, highly credentialed and successful. What's the consideration? What are they receiving for this? Are they equity-based? Are cash compensation? And then how many of them are full-time? And of those full-time workers, is anybody still doing outside freelance to arbitrage, the sacrifice of a startup?
So, like all of the team members are committed to join us after we're raising the round. So we have three of them are full time. One is paid as we go, and then the rest are based on equity. And another one is mission. So all the team members has felt this as their passion. They felt it as they were working. So, but that's the passion of everyone, and then based on equity.
Perfect. Thank you.
Sure.
All right. Hey, Randy, got a question?
Yeah. I like companies that have FICA-like scores. I think FICA, the FICA score set a standard at one point, but merit's a little bit different, I think. And I was just wondering, are there any? Is the merit score supposed to be internally within the company, or is this something that's passed between companies? Are there any confidentiality issues? And can somebody improve their merit over time?
So yes, so that gets improved at a time. So it's a continuous thing that they do, and it's owned by the employees. So that's our like employee first approach. So employees own their merit as their resume. They can bring it from one company to the other. We made sure that it's not getting companies' proprietary data. And then the companies, if they want to access other employees, the future employees' data, they will have to allow their employees to share their merit. So kind of like the same idea about the salaries. Companies to be able to access the average salary of other companies, they have to expose their salary, the average salary of their employees. So we are following the same model. So employees take this merit score with them from one company to the other.
Great. Any other questions from our investors? There we go. Jay, go ahead. You got a question? Go ahead.
Yeah, could you quickly go over your go-to-market strategy? How are you going to reach these business owners and executives?
Yes, so we are focused on US tech startups, tech companies. We are doing like founder-led sales. We do a lot of marketing, which is like doing a lot of marketing, trying to make them inbound. We do webinars. We have partners. Plug and Play have been one of the main sources that are getting us some of these bigger enterprises and get us into connection with them. We are connected with one of the largest companies in Japan right now. We are working with a big enterprise here in the US in Texas right now, and they're running our pilot. And so that's our main. Next, we are going to expand to healthcare. So that's the next step that we are going to do.
Great. Thanks, Jay. We got a question in chat. This is probably more about on the competitive side. So the question is, what stops companies like Workday and their ability to build these types of products and capabilities? And then how these tools reduce attrition and replacement costs? Maybe you can address both those questions.
Yes. So we are like the only competition. We are the only company that does it full autonomously, and we sit on top of them. So make Workday, Lattice, Leapsome, all of them is smarter. We don't compete with them. Companies might use us as a standalone, but larger companies already have this system in place. So we are going to get addition to that. And it requires you to be AI native, and right now they can build it in the future, but by the time they get there, we will have the data. So that compounding effect, and each time we are going to make a recommendation or coach someone, we are going to just get that better because it keeps learning from its recommendations.
Right. The second part of the question was, how is this tool going to reduce attrition and replacement cost?
So we are going to predict it. So it's like a cure. So it's not a cure, it's a preventative. So what we do is we find out if somebody is about to leave, we nudge managers, we nudge them, we re-engage them. So then we say, hey, it's AI that works with them. So we find out 90 days before they do. We look at the signals patterns and we can predict that.
Okay, awesome.
Hey,
we got one more question. Yo, go ahead, jump in.
Hey, so I was kind of the reason I had no questions in the first presentation, it was just really simple how they sell it. It's just a simple product. People need it, no friction. And we know that like selling AI and really smart AI is not about selling the best. You're selling to the lowest level of stupidity rather than the top, attributes of the actual AI itself. I just find this really, really, really hard to sell. And I'm just wondering, like, if you break it down for me like a 5-year-old, like what actually happens in the morning? Do you have somebody, are they on the phone? Are they sending emails? Like, how are these nudges working? Are people reacting? Like maybe talk me through how you get 5 sales or how you've got 5 so I can understand how you get 500?
Good question. Get it.
Yeah, so we actually reach out. We identify the right people. We find connection. We connect to them. These are the high-profile individuals, CTOs that we find out how we have connection. We reach out to them. That could be in conferences. So we were like in Transform. We got 25 leads from CHROs who actually came to us and we sold them. Also, plug and play. We go to the summit. They make us introductions to the innovation centers that we talk to and we get them on it. And then we provide the snapshot. This snapshot is getting us a lot of land and expand that we get the customer. We do last 6 months for them with lowest security commitment they need. And then we expand from there. Did I answer your question, Brian?
Yeah, kind of. I think it's a deeper, like digital question rather than even the physical question at the beginning. But I understand. Thank you.
Thank you.
Great, thanks. I'm going to answer these 2 questions that are in chat, and then we'll go on to our next company. So we have a question: how are you managing privacy compliance? And secondly, what triggers measure the indication that employee is about to leave? Let's handle privacy first.
Okay, the privacy one is that we are on the path to SOC 2 compliance. We actually just got approved by a hospital network that they wanted to use our retention component. So that's a highest grade regulatory. We received a grant of $100,000 from Amazon that get us containerized and put it in customers. So the data from customer doesn't come out of their system; it stays with them. So that makes us sure like we reduce the friction to get into the companies. The second one, what was the second one?
What triggers are you measuring that indicate an employee is about to leave?
So those are signals patterns. So it's not very simple. So we look at the patterns. We get all these data from a Slack conversation, from GitHub commitment, like Zoom conversation, and we see the pattern. Somebody who was a very engaged person, all of a sudden not, or somebody who was a low engagement and now a very high. So we see both of them. So when we see these patterns, we go deeper. We look at their code. Are they actually like committing their code and as regular as they were doing? So we look at those patterns, converge, and then start digging deeper, setting up one-on-one. The one-on-one AI does with them, asking them questions and contribute like how they contribute to that. And those patterns shows us this might be a flight risk. Another version is we look at their HRIS system, they pay, last time they promoted, last time they like their distance from work, how much time they spend in the office, those type of things, and we put them together. Now we can provide those signals to managers, whether get them involved or like our AI tries to find more information about it.
Fantastic. Great job, Alireza. Appreciate that. All right, you can unshare your screen. And then Lee, are you there?
Yes, I am.
All righty. You can share your screen now if you don't mind.
Let's see that this sticks and full mode.
All right. I'm going to count you down and look for a 30-second warning in chat. 3, 2, 1, go.
Hi, I am Lior Tabib. We are Business BrainAI, an AI platform for back office decisions for large manufacturers. In real life, the cost of waiting, for that we will have to unpack the back office decision concept. Imagine this guy, finance director, needs to approve purchase orders 80 per day and 20 invoices, again, a day. So eventually we have thousands of back office operational decisions to approve each day, like purchase orders, invoices, budgets, and the whole clogging decision makers queue. For that, companies, organizations have already set a proper chain of approvals, but decisions are hard to coordinate, hard to take. They mostly use guess or rely on the previous knowledge. We think that the basic problem is that decisions have no time spent enough, and mostly they're missing external data sources to get the proper decision. Eventually, bad decisions are made. They're made robotic and they disregard, as I said, external data sources that would have been beneficiary but would require 2 weeks of digging into the subject. The impact. Several studies examined the multi-million-dollar losses caused by poor decision-making. The impact extends from procurement, supply chain management, vendor pricing, inventory, transportation, and even compliance while auditing. We offer a better way. We offer an API to integrate to ease the decision queue. We have an AI at the heart of the decision to consult with and to coordinate messages and emails. We personalize the messages, the recommendation to each decision maker role specifically and personality specifically, but most importantly, we have a fully detailed recommendation that use both data from legacy data sources and external data sources. We're lifting the stress and the pressure from the finance directors and any other stakeholders like them. We're doing a week's job on a spot. The platform. We have a very easy to understand dashboard, as you can see, that sees the big picture, that knows where the Strait of Hormuz is closed and tariff has changed and what the impact on each of the decision. Business model. We see ourselves as approaching into large enterprises market. We see project fees of 100Ks and on-site consultant for 15Ks per month. Our go-to-market strategy would be enterprise sales and strategic partnership. This is how we got our 3 customers, and later on we will sell via digital authority and conferences. The team, our team are serial entrepreneurs building and selling enterprise technology for around the world for over 25 years by now. With that, Breeze's BrainAI intend to use this experience to fill up major gap inside the enterprise market. The ask. We already have 3 running customers. We already have founders that invested $250,000. And we are raising $3 million from strategic investors that understand our client well. Thank you.
All righty, great job. If you have a question, raise your hand in chat or you can post it in chat. Jay, you're up. Go ahead, Jay.
Yeah, you're raising $3 million. What's the form of the investment, and do you have any kind of valuation?
We have evaluation, of course. Let me just change. 25 million is the valuation, and we instead intend to have equity 12% for 3 million.
Okay. Any other questions, Jay, or more clarity?
No, I got a picture. I mean, I could ask pre or post, but 25 is, I mean, it's not that much of a needle mover.
Okay.
Yeah.
Any other questions? So, go ahead, Tim. Got a question? Go ahead.
Yeah. So before being a VC on a bunch of manufacturing companies, so this is a really great space to be in. I think one of the biggest challenges that we always saw was when you're trying to displace somebody who was a previous ERP, small like JobBoss, larger like Epic or SAP. They have all this historical data, right? That they're able to trend, and obviously they're starting to offer AI services, predictive analytics. How are you competing with them? What's to get them to move? Because it's a big lift. Or are you looking for people who are struggling in, using an Intuit software or Smartsheets for their ERP? Like who's that ICP?
Well, that's a good question. First of all, we are tackling the business back office market workflows. This is a very strange, a very specific market inside the whole big organization that I'm in for many years. Every big organization have workflow to allow approving of back office entities like purchase orders, budgets, invoices, and outrageous sales price, and so on. So there is already in place a proper workflow that is used to approve POs and everything. Okay, so we are tackling this clog of data that is robotic in a sense, and we are expanding it with an AI. And as for today, there is no other AI that actually doing that. We are from a workflow arena, and we know how to do that, but it's just automation, orchestration of the data. We actually look at everything in the perspective of decision, how to make a better decision instead of just we are orchestrating data. Okay, you approve first, and the other person would be the second one to approve.
Thank you.
Right. Any other questions for Lior? For Lee? If you can raise your hand or post it in chat. All righty. Thank you, Lee. Great job. All righty. You can unshare your screen. And then next up, we have got TJ Chang from PantryProof. TJ, you there? All righty. You've obviously figured out the drill by now, so
Yes,
I'm
I
going to
have.
cut you down and look for 30 seconds in chat.
All right,
3,
thank you, Scott.
2, 1, go.
All right, hi everybody. My name is TJ Chang. I'm the founder and CEO of PantryProof. We are raising a $750,000 pre-seed round. We're pre-market. So this is hopefully over the next 4 minutes, I can show you why tackling the food crisis is really going to help the financial landscape of middle-class families. So I wanted to start by posing a question. The question is, what is for dinner? And it seems like a simple question, but it's something that everybody asks over and over again every single day. It's something that we've had to face every single day. As we go through this, I wanted everybody to think about systems, right? What kind of systems do we have in place? We have systems for money. We have systems for health, even for travel, right? But when I ask people, what's your system for food? All of a sudden that breaks down. People get a little bit unsure about that. And without a plan, the world we live in right now is helping us be way overly consumptive. People will default to Uber Eats, going out, even going to the grocery store, buying things that they already have, right? So it's not that people are lazy, it's just that we don't have a system to get people there. And even though they sound like small decisions at the time, it can build up over the course of the year. You can waste thousands of dollars throwing away food that you already have in your fridge. I know everybody here has probably done that. You also can default to overeating outside of your household. Now, thousands of dollars can actually really help a middle-class family have a much healthier financial landscape. So I really wanted to tackle this. When I looked at the competition of what we have today, everything is about completing a task, viewing a recipe, planning a meal, placing an order. But the biggest and most dangerous assumptions that these companies are making is that they assume that the end user is at their best, that they have the desire to. And even though they might have the desire to at the beginning of the day, things break down, right? You're stressed, your work call goes over, your kid is screaming at you. All of a sudden, your plan breaks down, and then you go back to Uber Eats, what's unhealthy, what's draining your bank account. And that's where PantryProof comes in. We're learning the behaviors of your family, and we're helping you have a better relationship to food. I can dive into that a little bit later. I know Joey was asking about defensibility, and that's something that's really exciting for me to get into. But I wanted to talk a little bit about the product that we're creating. This product, even though we are pre-market, it is available. We're in beta mode. It is built. So we are ready to go to market right away after funding. We take into consideration everything you have, everything that you want to buy, your plans, and execution. But the exciting thing, and I think the biggest, moat for us is that we are learning the way your family operates. Did you skip a meal? Did you tell me that you're going to plan something and you didn't do it? Did you say you're going to consistently plan your meals at 6 p.m. and you're consistently missing it? That way, with all this data, we can help course correct your families to actually making the right meal plan decisions when you're not at your best, right? And that's one of the things that our competition actually does not do, is they don't incorporate this intelligence layer. It's free for families. I wanted it this way. I wanted this to be an accessible application for everybody. We monetize through businesses. We are an approved vendor of Instacart. We're actually at their highest commission tier at 5%. We have brand sponsorships and advertising revenue. And we've been able to find this B2C consumer app with a B2B model. Definitely have more information on that as well. Going to market, our ICP is clear. This is one of the most exciting things for me and things that I love go-to-market strategies. Our ICP is simple. It's that person that opens a fridge at 5 p.m. and say, what's for dinner? 3 pillars as we go to market. We have partner distributions, paid acquisitions, and content-led acquisitions. We do have a partner distribution that gives us direct access to over 100,000 families. We are under NDA on that partnership right now, but most of the funds that we are raising in this round is going to paid acquisition and scalability. This is where I brag about myself for a little bit, because you really are investing in me and the team. The product will always iterate. I founded 6 companies, 5 of them have been funded. I've been twice incubated by Science VC, which is the VC that did Dollar Shave Club and Liquid Death. I was actually in the same cohort as Liquid Death, so I got a front row seat to seeing how they built a billion-dollar company. A little bit about me, I'm first generation. We see food very differently in my culture than we do here. I've seen food give people health problems, financial crisis, and I personally benefited from having a much healthier financial landscape with my husband and I, just by rethinking how we see food. So I am tenacious at this. I want to find systems. I want to solve them. I always look at things from the lens of what problem can I solve? What's already out there, and how can somebody not copy what I'm doing?
All right, TJ, why don't you put your Ask slide on and we'll go through Q&A.
Sure. We're right there.
All righty. Randy had a question. Go ahead, Randy.
Yeah, so look, I'm on life sciences, but I like health tech. And so I guess the question here, real honest question, is who's your customer? Is your customer families that are trying to sort of become more efficient with what they do with food, or is your customer truly the people who are paying you, who are trying to analyze what are the buying trends of the customers?
Well, for our customer, for our users, it's definitely the first one. It's the people that want to have a better relationship to food, that want to save money, that want to be able to eat healthier. This is definitely the right time. We have a lot of articles and news coming out that about how to eat healthier. But it's simple. That's one of the reasons why I wanted to make it as a free app. I'm directly targeting middle-class families, the families where an additional $1,000 or $2,000 a month can make a very big financial impact of their life. So that's my customer. Now on the B2B side, where we monetize, that's where we're accessing data and making sure that we tell the businesses we have the people that you're trying to advertise in front of.
All right, but if I may, I'm sorry.
Sure.
So people lie, right? People come from different cultures, right? My wife is from Britain, and she believes that we should shop every day in small stores, which we don't. I come from a culture where we shop once a week, maybe twice a month sometimes. But I guess my point, my question though, really, is I like what you're doing. So is it intended to have families monitor, like have a record of what they're doing, or are you going to sort of create, the sort of ideal, what an ideal family should do? So
yeah, I don't know
if I'm saying that right. Sorry.
No, I think there's a lot of ways families can approach this. At the core, we're just creating a plan for them to follow and keep them accountable to that plan and bring them back to it. There's a lot of use cases. We have about 200 beta testers using this, where some are trying to eat healthier for fitness, some are trying to save money, some are just trying to put food on the table for their kids, right? So the use case is different. And I tell people, I'm not creating Michelin star chefs here. I'm just trying to get you to be able to save money, putting food on the table in a healthy way.
No, I'd love to be a beta tester. So
absolutely.
We can have a call offline. So
I
thank
would
you,
love that.
Appreciate
Yeah,
it.
I would love
Sounds
that.
good. Thanks, Randy. Tim, you got a question? Go ahead, Tim. Tim Holiday, you there?
Yeah, sorry, thought I had muted. One of the more clear pitches, TJ. Really well done. Very thoughtful and kind of methodical in walking us through a journey in just 5 minutes. So well done there.
Thank you.
2 things. Talk to me a little bit more about kind of the go-to-market motions. You talk about this partner, can't disclose yet. That's fine. But then also just like paid, which is a great strategy, but also can be expensive and interesting. Maybe talk through maybe influencer. And then the second question is just when is launch? If I might have missed that.
Yeah, when is launch? It's actually the technology itself is ready for launch because it's AI. We have 200 beta users. We wanted to fine tune it before we launch, right? Because early stage AI, we're going to get bad AI results. The more people use it, the better the results will get. So we wanted to get the app to the point where we can be 90% confident that we're giving the right recommendations before we go live. We pretty much have one shot to gain trust with these users. So we wanted to make sure that we're live. Go to market. I love this. It's important to note, before I started this company, I was a fractional CMO, and I also bought a marketing agency as well. So everything that we're getting, we're not paying 15,000 on retainer for it. We already have access to the placements as well. Formerly, I've created a lot of companies before, and what I saw was that people created great technology and they didn't know how to market it. So when I took a little bit off, I was like, what do I want to do? I'm going to buy a marketing agency because next time I go at this, I'm going to want that to be able to power my marketing decisions. So this is B2C, heavy on content, heavy on emotional trigger, heavy on that pain and that stress of can I be better? Using about 30 different pins, targeting different emotional states of minds to try to convert them.
Got it. Thank you.
Yeah.
Great, thanks. Tim, Gary, go ahead. Got a question?
Yeah, hi. Could this also be used to help people understand the food wastage that they're getting? Because that's one of the biggest, like you said, people are always throwing stuff out of their fridge. And, this creates an environmental impact and it creates a story that can be told as well.
100%. And that's really where we get to grow to the network compounding effect. I'll tell you, I grew up in a family where if we threw something away, we'd get a slap on the wrist. Like that was not okay for us. Absolutely. And then I've already begun conversations with entrepreneurs and executives in the grocery space where we can help them save the food that they're throwing out and redistribute that towards pantries, towards homeless shelters. I have a great vision of neighborhoods even collaborating if somebody goes on vacation, sending their food somewhere else and really creating this ecosystem. So there's a big vision around sustainability and impact. I love that vision and it drives me, but first and foremost, we need to gain trust with the individual first and show them that they can be successful using this, and then we can, go and conquer that grand vision. So absolutely.
Also, another little part you mentioned about emotional states. So you've also mentioned accountability several times. Yeah. Now, there's a lot of diet apps that try to hold people accountable, and people hate it.
Yeah.
So how do you overcome that emotional reaction to, the holding people accountable and feeling it now becomes a should rather than I want to?
Yeah, there is one common belief, like you have to want to get better, but the problem is we utilize, pop-up reminders, calendar reminders. We're able to learn their lifestyle a little bit, but if at the end of the day, if you don't want to get better, then this isn't for you, right? You have to have that desire to want to get better, such that if I give you a pop-up on Sunday afternoon being like, hey, have you planned your food for the week? You should respond positively to that. If you're just like, no, I don't feel like that, and I feel like spending $1,000 on food this week, we're probably not for you, right? But in the day, we have constant pop-up reminders and notifications to remind people. And we're also logging when they forget to do something that they say they're going to do. And I think just putting that in front of their face does something to trigger the mind of, oh, you know what, I need to do better. And that in itself is my hypothesis. We'll see. I mean, we're always testing. We're always iterating. Again, this is...
So TJ, let's try to get a couple more questions. Wilson, you got a question? Go ahead.
Yeah, can you just go back to your team, how your team's comprised? I only saw... Okay.
Yes.
Okay, so I have a family member that's like a registered dietitian in the medical field. How are you going to implement the science behind putting all of this stuff together from a nutritional standpoint?
Yeah, so we follow a lot of the guidelines with the HHS, and we're also we're taking the food guidelines are changing all the time, but we have advisors in the HHS that are helping us come up with the right types of food and nutrition. So we don't claim to be nutritionists. Everybody has a different diet plan, so we encompass all of that, but we try to just stay within the health guidelines of the HHS.
Okay, thank you.
Great, thanks. We got a couple questions in chat. TJ, try to answer them relatively quick.
Sure.
have a question. How are people ordering off the app? What's the transaction look like from that standpoint?
Yeah, they're ordering through Instacart. We actually will figure out exactly what they need for that week's plan. That will automatically go towards a shopping list, and then they'll go over to Instacart. On our end, we capture 5% of everything that's ordered through Instacart.
Great. And then last question, what's the biggest risk you foresee?
I mean, the biggest risk we foresee is, Sam Altman coming in and just copying everything that we do. But that's why we built defensibility. That's why we wanted the system to compound on each other so that by the time they come in and try to recreate this, we already have so much data that it's probably more worth it for them to buy us out than to recreate it. But yeah.
Fantastic. Great job, TJ. Awesome. You can unshare your screen. Mark, are you there?
I am. Yes.
All right. Why don't you put your share your screen?
Okay.
All right, Mark. I'm gonna count you down in. Well, let's get your screen up first. All right, go into slideshow mode. All right, look for a 30-second warning in chat. 3, 2, 1, go.
Hi. I'm Mark Terrill, CEO of OrthodontiCell, and pleased to be able to chat with everybody today. And we're here to talk about something that's near and dear to everybody's heart, and that is getting straight teeth. We have a bioelectric stimulation device that cuts the treatment time down from 18 months down to 6 months using our home device only 25 minutes twice a week. We're raising $2 million. That's what's left in the round on a convertible note or a safe, 20% discount, and an $18 million pre-money valuation. What's the problem? Problem is in these days and times, everybody wants to look good and feel good, and it starts with your teeth. And they're going through the process. 12 million people are doing it right now. Since it's a long process, a lot of people drop out because it's long, it's painful, and there's no real clear FDA designation to improve that. Our solution is using the bioelectric stimulation, which think of it as a TENS unit for your mouth, where we target very specific proteins that have to do with teeth acceleration and then bone turnover. And we shorten that time down dramatically. To do that, we have to make sure that we build a moat around our technology. We already have 7 patents that are granted, and we already have a published study that was in the largest orthodontic journal, showing in 3 months, 60% of the people in the study had permanently straight teeth, and in 6 months, 100%. This is a big market. Just in the United States, it's $20 billion. Again, this is a worldwide problem. 3 billion people with crooked teeth, 50 billion in a worldwide market, and 4 million people get straight teeth every year using braces or aligners. So what is that go-to-market strategy? How are we making money? We sell directly to the orthodontist and the dentist. We manufacture this device. We are going through the FDA, so we are pre-revenue. We sell the device for $500. We make it for $100. And then the orthodontist would be selling it to the client for either $800 or $1,000. Our team is really strong. Me, myself, a 7-time entrepreneur in medical devices, lucky enough to have a couple exits and an IPO. We have John, who's an orthodontist, 35 years, co-founder. Howard, he also has had a couple exits. Most importantly, we have Darren on our FDA regulatory side, 25 years taking new products through the FDA. On our advisory board, we have orthodontists and dentists, and actually an individual who owns DSOs. So that's also going to help on our go-to-market strategy. We are, as I mentioned, go through the FDA process. We are ready for our independent human study, raising the capital to get through that. That process is somewhere between 16 and 18 months. And we will be completing that at the Q4 of 2027. Again, raising $2 million on a convertible note. And we're using the funds for the FDA process. It's a long process, and that gets us all the way through our commercialization piece. We are de novo. We don't have any competition. The FDA had suggested we do that. This takes us through that clearance part. And the biggest piece is our exit. And we feel because of what we're generating here in a new market with both braces and aligners, one of the aligner companies who want to take over from Align Technology, which is the 800-pound gorilla. We feel that that's going to be the exit. We see this time frame as in the 2 to 3 years from now, going through the FDA. And if anybody has any questions, be happy to answer them. But thank you for listening.
Fantastic. Great job, Mark. If you have a question, you raise your hand in chat. We'll start with Randy. Go ahead, Randy.
Hey, Mark. Hey. I love how you're identifying the problem and solving the problem. I just make a couple. I guess it's two quick recommendations. One is there's a huge demand in China for this. Probably India also because and the first thing that a person does when they get money is they make sure that their kids have straight teeth. That's one thing. Secondly, there's a person out there who's both has a dental background and also an MD who you should speak with, and his name's Gary Goldman. I don't know if you've ever spoken with him, but you should definitely speak with him, and if you need to, I can put you guys in touch.
Thank you very much. And just a couple points and I appreciate the talk about China. We've actually already had conversations with the UK, with Dubai, Japan, and India. China, we have not. So definitely appreciate that.
Okay.
Great. If you have questions, raise your hand in chat. So, Mark, you mentioned obviously the potential acquirers, and maybe you can, they're your competition now. How are you addressing, the competitive advantage you have? And maybe you can outline who these potential acquirers could be.
Great question. First of all, we work in conjunction with braces and aligners because you're only using us 25 minutes twice a week. So the competition really is not an aligner company. They're our friend. They're our partner. So there are two devices that are out there today that are FDA approved. One is using laser light. The other is vibration. Clinically, they're FDA approved. Clinically, they do not work, and the clinicians will say that. They are only approved for the bottom 4 front teeth. We are going de novo for whole mouth. So we're completely different. That's why the FDA said go de novo. There isn't anybody to compare you to.
Great. Any other questions for Mark? Tim, go ahead, Tim.
Hey, Mark, have you guys, and sorry, apologies if I missed this, have you completed a Q-sub and got initial feedback for that de novo?
Yes, we absolutely have. We've been going back and forth with them, and they're the ones suggested it.
Okay, so you're pretty confident on that timeline and the capital costs for that based on their feedback.
Absolutely. We've been doing this for a bit, and we are very, very easily within that range. So just so you know, our original raise was $2.5 million. We already have $500,000 of it.
Perfect. Thank you.
Thank you.
We'll take one more question. You can either raise your hand or post it in chat. All righty, Mark. Thanks very much. Great job.
Thank you.
All right. So what we're going to do now, these are our presentations today. We got a few things coming up. We're going to have Jason Hammond speak in a minute. Then we're going to get some feedback from our investors, and we'll open up for some questions for them after Jason's presentation. And then we'll close out the call, and I'll keep the Zoom open. If you guys want to post, chat, network, it's all up to you. But what I'm going to do now is going to introduce Jason Hammond from Fidelity Private Shares. He's been a great supporter of our events over the last several years, and he provides a really valuable tool. And I think the investors could appreciate this, is having an entrepreneur with a complete and organized data room and an organized cap table. And so I'm going to have Jason share a few minutes about Fidelity Private Shares and their solution, and then we'll go from there.
Great. Thank you.
Welcome, Jason.
Thank you, Scott. Appreciate it. Appreciate always joining the Black Dog events. They're always great events, and great job to all the founders and the investors as well. Much appreciated. I'm going to share my screen real quickly when I get a chance to. Cancel out. So really what I want to get into is what Fidelity Private Shares is and kind of how we came about. So Fidelity, as everyone knows, is an 85,000 person company, $38 billion, trillions under assets. managing cap tables for many, many, many public companies. And about 5 or 6 years ago, they kept hearing from these companies that were IPOing with them, basically saying, why were we on Carta? Why were we on something else when we were doing our raises? Why couldn't we have been on a Fidelity solution where we could have used Fidelity for their 401k, their HSA, and then IPO with Fidelity, so it didn't cost us any money to bring all the information over from another system into Fidelity to be the transfer agent for the IPO. So I was with a company called Shoebox, and we do cap table management. So we have a cap table, a data room, and then we also have all the Delaware C NEVCA docs in the system. So you can issue grants, do safes, convertible notes, 83Bs, all that through the system, 49As, everything through the system, through Fidelity private shares, through Shoebox. So Fidelity private shares, Fidelity basically came to Shoebox and said, hey, we're looking for a partner to integrate with because a lot of our clients are looking for something to start on real early in their pre-seed stages and do all their raises with something that integrates with our system. Long story short, Fidelity is so compliance driven, SEC driven. The NDAs didn't cover everything they needed, so they ended up acquiring the company I was with, Shoebox, about 4 years ago. So now it's called Fidelity Private Shares. And really what we do is we are that a difference to Carta. So we're something that does your cap table. We work with you on your cap table, data room, and everything like that. And the difference between us and competitors is because everything's web-based and entwined, like our cap table and our data room are entwined. So once someone does a raise or issues a grant or does a safe, it automatically updates the cap table and the data room. So you don't have to go in and keep updating that. So it's very easy to use, very convenient to use. I'll get the list and I'm going to send out an email to everyone, and I'd love to set up meetings with everyone possible to see if we can go over the solution, and I'll walk you through it. I didn't want to go through that today. I know we've seen a lot of presentations, but I just wanted to give everyone an idea of what we did and let you know that, you will see an email coming from me, and I'd love to take some time to spend with you and show you the solution and figure out how we can work together. And I'll give you a little quick thing on my job, and this is how we differentiate ourselves from a lot of competitors. I work with people like Scott around the country. So I work with VCs, I work with founders, bring them together to do events, work with COI, so it could be fractional CFO companies, event companies. So bring them all together around the country to let founders meet investors, let you figure out, who's great to work with, who's not great to work with, and let you understand and figure all that out. And first and foremost, get the Fidelity Private Shares brand out there because, a lot of people know Carta and they know Pulley, they know the big dogs, but Fidelity Private Shares, we have thousands of clients now, and we're looking to make a big impact in the market. We want you to be a client of ours from day one to IPO. So thank you, Scott. Thanks, everyone, and love to hear from you. Love to hear from you when I have the meeting set up.
Fantastic. Thanks so much, Jason. I put Jason's scheduling link in chat through our partnership with him. We have some special opportunities for anybody who meets with Jason. Thanks again, Jason. What I like to do now is I want to get some additional feedback from the investors. So what I'd like to do is I'm going to go around the room, or you can raise your hand and jump in. And what I'd like to hear from our investors, and Mohammed, I'll get to you in a couple of minutes. You can unraise your hand. What I'd like to do is get some feedback from what you heard today from our investor panelists, from our entrepreneurs. So let's do this. I'm going to bring on my good friend, Brian McMahon, because I'm sure he has some feedback, but he's actually going to be working on a great charitable event. I want to take a couple of minutes to talk about what he's doing in New York coming up later. So Brian, why don't you share a little bit about the tournament and event, tennis event you're doing, and then tell us, give us some feedback what you heard today.
Yeah, thank you, buddy. I'll do the feedback first. Actually, I think what's really nice about these is I've been on them for a while, and I love the fact that there's more and more focus about the customer acquisition. Like it started out, there's at least 2 companies there that are like highly investable companies that are bargains, actually. And then there's a couple of others who are very aware of the situation, but just in a sector which is relatively difficult to do. So actually, normally I'm coming on and I'm like, blah, 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 blah. But actually, I'm highly complimentary today. I think the companies are getting the hang of it. They know the market and they're pushing hard. So just massive compliments. I will say that raising money in general is all about access. And if I give like a very quick personal story, like 2 years ago, I had thousands of investors who are all highly active in the space. Last year, I saw 90% of those investors, I don't want to say go poor, but they certainly disappeared and stopped answering phones. And I don't mean to us, I mean to the founders, the 266 founders that we had in our portfolio. So at the beginning of this year, I set about building out an entirely new investor base. Now, if you imagine an investor with 266 investors doing this, it shows you what the market's like that we're in right now. And I spent pretty much the entire year at family office events, which I highly recommend to anybody who can go to them. And so because of that, I built up tons of contacts. And what do family offices love? They love tennis. I happen to love tennis as well. So we partnered up with an amazing charity in Manhattan, which is the Harlem Recreational Center. And that recreational center helps, disadvantaged kids be able to get into tennis and just be able to break into places that they couldn't be able to break into. They said, why don't we do a pro-am during the US Open? So in the first week of the US Open, we're actually creating a pro-am. If you think of Milken's pro-am, which nobody here is getting access to, including me, this is like that pro-am, but just everybody can get in with very easy access. We want to bring investors in there and we want to have access to just great people who want to do it. And we want to create a super event. I'll post it in chat just when I'm finished talking, but we have at least 20 top tennis players. I'm talking about like number 3 in the world singles tennis player, the number 1 doubles grouping of all time. Like it's a great, great, great event. Scott is not just a friend, but a huge partner in this event. And so we're going to arrange a ton of stuff. So look, I'll put the link in there, but before anybody registers and does anything, just reach out to Scott. Let Scott arrange something that's slightly more special and more access to folks here. So I'm really glad to be a part of it. Anyone who's an investor or anything, just come along and be a part. And thank you, Scott.
Brian, I think Ash already took care of the link for you, but thank you for that. So what I'm going to do is I want to kind of get some more feedback from what they heard today. I mean, I personally was extremely impressed by what I heard today on the presentation side. But if we got some investors, I'd love to hear 2 things. Maybe some feedback about things you liked, and maybe a piece of advice for our entrepreneurs that presented today. If anyone, our investors want to chime in, you can simply open your mic or raise your hand, or I'm going to begin calling on you like you're sitting in the back of the classroom. So you choose. So
Hey, Scott.
Yeah, go ahead, Jay.
I'll kick it off. One of the things I liked is almost everyone had a very clear pitch. It was easy to follow this time. A lot of times you see people really scattered. I think I'm on about the 60th pitch I've seen this month. So I've been seeing everything across the board. And these were some of the best presentations I've seen so far. The one thing that I didn't see that I'd like to see more is what I talked about at the very beginning. And that's like everyone has a team slide and they talk about their team, but they don't tell me why each team member is so important to build the value in the company going forward. I don't want to know where they come from. I want to know why they are instrumental in being on this team. So that's one thing I think they could still zero in on a little better.
No, that's a great point. Yeah, I use an analogy that the Yankees spend a lot of money on a great team, but it's been a really long time since they won a championship. So it's really about how the team can execute. Thanks for that, Gary. Jay. Gary, I'd love to get your feedback. What you heard today?
Yeah, I thought the presentations were very well done, very, very professional, very clear, without a lot of text. I've seen so many presentations lately. I've seen some with even 8-point font, and I'm kind of like, you got to be kidding. And so I appreciate everybody was really direct and on point. I think the presenters did a really good job, and I think most of these weren't in my field particularly, but the PantryProof is a very interesting piece because they actually I would have been great if he could have brought some of that social impact out as well, because that's an important selling point to consumers these days.
Great, thanks for that. I'm going to take some of our attendee questions in just a couple of minutes, so you can pull your hand down. Tim, we'd love to get your feedback today.
Yeah, I think good job overall. I mean, absolutely good. Almost like the pitches followed Guy Kawasaki's 10, 20, 30, clear, concise, delivered. We appreciate that. Also gets a chance to know you. Customers were excellent, really understanding who and where. One of the points I had mentioned early on. I think the competition was a little overlooked and assumptive because of, it's not just and AI, but the ability to take an existing CRM and use MCPs into your Claude. Like, there's a lot of workarounds here that people are going to try first, or at least exploring. So I'd put some focus on that. A couple things to take away. I heard mention on convertible notes. One thing I've been seeing pretty consistently from notes 2 years ago becomes an unnecessary pressure point when those mature, right? If that's the only check you're getting, you're going to take it. But if you can steer them to safe so that there's not a clock, all the better. I've helped unwind these convertible notes from publicly traded companies that invested, and their auditors are coming and wanting to know why this asset's still sitting there. So it can be a little bit headache. Second point is a little bit larger, but often kind of overlooked, is board governance. How are you steering? Who are the board members on the company? Just having the ability to say there's strong stewardship governance here. The money's being looked after. We've got protocols. We are having minutes, notes. We're not just throwing out safe notes, but we're actually going to have a board resolution. Those are things that help just put more feathers in your entrepreneurial cap, not just your product or experience, but how your ability to run the company does sit well. That would be it.
Fantastic. Appreciate that, Tim. Petra, I'd love to get your feedback today.
Hi, thank you. As always, we so appreciative of this. I mean, Scott organizes so well every time. Great group of entrepreneurs, great, well presented. Before I go into that, I actually also wanted to mention you guys definitely should watch Brian. He Expert Dojo. We've been watching them for a while. Amazing fun. Definitely look out for them. They have this sort of engine for growth. They know how to. They plug something in and the company explodes. So definitely watch for Brian. And Brian, I know you have I think investor portal that you launched this week, so we're definitely going to look into that. So that in terms of the talk today, I think again, just like every other event that we have seen with Scott, very well thought out. We get hit probably about 400 pitches a month, and not all of them are quality. So this is very well prepared entrepreneurs. The kind of thing that more interesting to us is B2B side, less B2C. We felt like something like PantryProof is, very genuine entrepreneurs, but I would find that a little bit challenging in terms of, how do you grow. For example, business BrainAI, we also find that a little bit challenging because that seemed like a wrapper, which is something that people are a little bit uncomfortable nowadays when it comes to defensibility. And then also they kind of casually mentioned, we have 3 customer, but there's no information of where you really are. We have no idea where are you in terms of, and it's fine if you pre-revenue, say so. It's just not very clear whether it seemed like it's a concept pitch instead of truly a real product. Connexus we thought was great because they're showing consistent growth. Year 1 we got at this point, and the next year they already won over $1 million ARR, and the next year they're over 4 million, and yet very conservative valuation at 15, and still raising the stakes. I think that's great. So overall I think it's great. So thank you so much for having us here.
Thank you so much, Petra. Randy, I'd love to get your feedback.
Overall, guys, great 5-minute presentations. I mean, a lot of information was actually conveyed. I think people did really state the problem that they were trying to solve when they were and then how they were going to do that. I think one of the only sort of negatives I think here is, I know how to say this correctly. I grew up in Pennsylvania in the coal region, so that's how we speak. Sorry about that. Don't believe your own bullshit sometimes, right? right. And I have doubts on some of the customer acceptability. And I agree with the last comment, B2B and B2C. But really, but think hard sometimes. Does somebody really want to buy this? And and what they want to pay for this over a certain period of time. But anyway, great group, great investors, great companies. Please invite me back.
Thanks, Randy. Appreciate that. Tim Holliday, you've been on many of these calls. I'd love to get your feedback and perspective today.
I mean, it's always great. Like I said, curated. We get to see hundreds and hundreds of pitches, so it's good to have a more curated group. I think for me, great point about market acceptability, audience acceptability, customer acceptability. I mean, I think some of that is just like you just got to get out there and get it going. And so there's like this concept of when do you approach investors? Are you pre-launch and you're kind of warming things up? Are you in market? We like to try to get it as early as we can, but you still want to see some of those proof points. You want those founders to prove that out first, to spend the time, the effort, the capital to get in market, whether that's B2B or B2C. Same problem, same concept. And you see a mix of that today and every time on these calls in terms of their stage and when they want to try to raise. Raising capital is not the end all be all at all. It is a tool to be used by these founders and a tool for us investors, right, to help grow. So anyway, great stuff. Of course, I'm a little more hypersensitive maybe to the, of course, the B2C side, and also, kind of the ability to communicate an idea super clearly in 5 minutes. That is tough. My pitch when I was on with you, Scott, was 1 minute, 60 seconds. You have to just really dial in on every word. And I'm not suggesting that here, but there is something to be said about telling a story in those 5 minutes and bringing us along a journey and helping us see a vision as quickly as you can. So great work.
No, I appreciate that, Tim. And obviously, the reason why we do this is, I tell the entrepreneurs this, the goal is not to boil the entire ocean. It's to give the investors enough information to want more and want that second call. And that's really kind of what we're focusing on. So let's do this. Unless we have some other investors that want to provide feedback, I'm going to take probably the next 10 or 15 minutes and take a few questions from our attendees. Now, I am going to warn you, your question is not a pitch. If you want a pitch, reach out to me and we'll give you your shot. So if you have a question about the industry, about focus, about how to structure your deal, ask me those questions. All right, Mohammed, you're up.
Yes, I've been with some other investors like JD Fox, and we were focusing over European market because US is very good with the existing startup, but Europeans are developing now. So I think JSON platform is good for European, and I would like to have it using that platform other than US for US purposes for investment. So if we will have an opportunity to do that, that would be great for us.
All right, well, we do this, Mohammed. Why don't you reach out to me via email? We'll try to get you on a future call. How about that? All right. All right. We got some questions coming in chat. Let's see. Oh, Anne's posting in chat. Okay. Yeah. So the question came in about our next event. So we do these events every month online. Our next event is going to be August 20th. We actually do events around the country. As I mentioned, we're going to be in Santa Barbara on October 8th with Tim at Steamwork Ventures. We're going to be in Tampa, Florida. We're going to be hosting the pitch event at the Women's Life Science Conference on September 14th and 15th. We'll be hosting the pitch event there. So if you're in life sciences or you're a woman entrepreneur, reach out to me about that. And I'm happy to, answer any questions you have offline. Any other questions for our investors today? All righty. Well, fantastic. Well, I'm glad we got through everything today. And what I'm going to do in closing is thank you all for joining. I will be sending the recording and details on our upcoming events once I get the recording on our YouTube channel. And then in closing, again, I just want to thank our investors for taking their valuable time. I want to congratulate our presenting companies for doing a phenomenal job and all the people that joined us today. And as I say in closing all the time, if there's something you didn't like, tell me. And if there's something you love, tell everybody else. And with that, I wish you all a great time. I'm going to close the the recording portion of today. I'll keep it open for a little bit if you guys want to do some networking. I'm probably going to be returning emails in the background. Thanks all for joining us.
Thank you, buddy.
Thank you.